morning, traders. I'm Dennis Dick.
And I'm Joel Elconin. Welcome to Premarket Info.
Apple continued its trek down, losing another 20 points yesterday. It's quickly approaching that 530 number that we were talking about a few days ago. Where is it heading? Earnings from Disney, Groupon, and J.C. Penney really disappointed. Priceline is buying Kayak for $40 a share. And we're going to break down your S&P top components. These charts are broken and many of them continue to move down. Joel, let's start with Apple.
Boy, oh boy, oh boy. Where are the analysts now?
Oh, it is just ugly. It just continues to go down. It's down another $2 here, an early trade. 535.81. We talked about this 530 number. I'll take you out to the weeklies to show you. You had these couple of bottoms, one farther down at 522.18, but for a few days there we bounced in that 530 area back in May. So I think you might find a little initial support there, but it's so hard to say. I mean, the stock has just lost 45 points in the last 2 days. It's very hard to pick a bottom on it. I don't know. What do you think?
Well, you just don't buy. I mean, you hear people saying, well, it's cheap. It's cheap. Well, cheap stocks get cheaper. And right now, there's absolutely no reason to be touching this stock on the long side. I mean, you at least got to wait for a double bottom to get put in place. Looking at the low from May 18th, 528.66, you might get a little bounce there. I see more support at 516.22. But there's just, you have to wait for this consecutive, down days to at least come to a halt and make a 2-day high or something. But looking at it, it could very well have its eyes set on 500.
I just don't know if I see it getting that low for two reasons. I think the sentiment has gotten so bad now. I think you are in the process of washing out all the short-term participants who had the $1,000 target in mind when they were buying it up at 705. I think a lot of these people are now starting to get washed out. You are starting to see kind of a capitulatory move. I wouldn't be surprised if this thing actually went down today, maybe through the 530, shake people out, but eventually closed green. I think you're just due for a bounce back. Now, does that mean Apple, the bottom is in overall? I don't know, but I think it's oversold, and I think it's due for a bounce. But I do think there's more pressure. I do think intraday, and this is just my own thoughts, I think intraday this could lose another $10 or so, and then all of a sudden maybe buyers come in here and start buying it up.
I mean, the only thing, we talked about this trend line yesterday coming off the highs, really basically coming off the high from the 652.79. That's one steep down trend line. It is. I would put that baby in there, and if you're playing it from the short side and it breaks above there, you're going to get some covering. But just wait for it to come up and take you out. And on the other, on the flip side, the rallies are going to be vicious too. Before we move on to the earnings stuff, I just want to just alert our traders to Google. It did take out that 670 level. I know we were hoping it was going to make a bottom there, so just be careful in the Google. You're approaching the 650 level. You have a low to keep an eye on at 646.68. That was the low on August 13th.
This chart is completely broken. You had the big down move after the disappointing earnings. You had basically 2.5 weeks of consolidation, and now it looks like it's going to be a continuation of that initial move. Scares the hell out of me looking at this chart. I don't think I want to be a buyer here at all, and I think if you get this stock rallying at all, you're going to find sellers. Just too much consolidation. People were banking, that was the bottom, and all those people will want to wash out now too. So I think Google could be in store for another bad day here again. It is trading down $1 in the pre-market, but I don't think the 650 level holds. Moving on to the earnings, there's a few big ones. Disney reported last night. They announced 68 cents against estimates of 68 cents. So they met the estimates, but the revenue was light. Stock is trading down in the pre-market. After hours had a little bit more volume, light volume today, but 48.55. So it's down $1.50. If you look at the low from a week and a half ago, we had a 48.80 low. We have taken that out in the pre-market. Joel will find out where it went to after hours. And you got to go back to August and looking at that August 2nd 48.13 number.
Exactly. You did your homework on this one. Looking at the pre-market, the initial spike took us down to 48.57, and then you got a little bit of a lazy rally back up in the 49 handle. That did not last very long. We're just sitting here at 49.55. I imagine it's probably
48.55.
48.55. I imagine it's just offered there. I do like that 48.13 low from August 2nd as support, as a place to cover short. I don't think I'd stick my nose out there to try along. But once again, I mean, there is, volume. There's not much volume associated with this. This is a big, thick stock. There'll probably be some nice bids to take out on the open. But if you're playing it and it gets above 49, you could get a little pop. But I think all those old lows at 49 is going to be good
I think
resistance.
so too. I think that's a great point where you have this classical setup where old support might become new resistance, and you had all those lows in August in the 49 area. So I think that's where you might have some sellers stacked up if the stock goes for a rally. Groupon reported earnings here too. Surprise, surprise, they disappoint. I think they always disappoint. It's down
Wow.
17%. They didn't make anything. They were supposed to make 3 cents. This stock is just a continued disaster. I still think, like we've been saying on the show, this is like the road to zero for this one. Was a $20 stock a year ago. It's 3.20 now. Just more pain for Groupon shareholders.
Yeah, I mean, it spiked down to 320, and it is just
It is there,
pull out to
318.
318. Yeah, I mean, it's just hard to pick a bottom above this, above zero. Probably would get some short covering too. I think if some bids here, it's down a pretty good percentage. I say it doesn't get lower than $3 today, but don't quote me on it.
Don't quote you on it.
Yeah.
I don't know. I have no interest in owning this thing whatsoever. J.C. Penney, another disaster here. They lost 93 cents. They were supposed to lose 7 cents. So this is
Oh,
just a mess. A mess, a mess. It's actually bounced back a bit from where it traded off the initial report. Comp store sales year over year down 24%. If that's right, that sounds crazy. Nothing good going on at J.C. Penney, although it's trading 2012 now, and it was down at 19. How low did it get? 19
it
bucks.
got to 19 right on the kisser, man.
So it got
Like,
to 19, which coincides nicely with that double bottom we had back in July at 1909 and
yep.
1906. So technical here. Obviously, if we get back down that 19 area again, you may find some buyers, but just fundamentally speaking, I'm not in love with this one either.
Yeah, it also had some lows in that area back in August of 2010, and also back in 2009. I guess Mr. Johnson is better come up with a little better marketing plan here. I mean, not to go into our usual rant on the retailers, but I mean, Target, Kohl's, all these places. I mean, I go into those places maybe like once, twice a year to maybe buy some socks or something. I mean, they're all the same to me. They have the same products. I don't know how they all can survive, and especially with people buying stuff online now. I don't know how these brick and mortars are going to hold up.
Well, clothes are not bought online quite as much as obviously electronics, so I think that's how it holds up. But people want to try the actual clothes on, so that's why I think it does hold up a little bit better. And a lot of these retailers here have been pretty strong, but yesterday was a breaking day for them too. Like you were saying, Kohl's had decent numbers, opened up okay, but then turned around and just catered and just kept falling basically all day here after the open, losing as much as $3.50 by the end of the day. So there's another broken chart for you on the Coles. Target's the same story, opened okay, started rolling over in the afternoon and just never looked back, losing $1.50 too. So lots of these retailers here not looking great on the charts. Moving on, we do have a merger here to talk about. Kayak, Kyak, is getting bought by Priceline for $40 a share. There's no sense doing a technical on Kayak. The risk arb guys come in and it's at $39.24. Obviously, if the merger goes through eventually, that just moves to $40. Might as well talk about Priceline though, because Priceline's actually trading down a bit last night on this report. Joel will actually go and find where it traded down to after they announced the merger, but it's getting to that whole gap area that it had from
Yeah.
earnings.
I mean, yeah, what the heck are you going to do with this stock? hit 613.98 in the pre-market. You had that earnings blowout that took it up to 657.60. I mean, how can you touch the stock until it gets back under 600 to fill this gap down to 560, 586.84? I mean, it's how can you touch the stock in that area unless you're short taking profits? There's no reason to have any bids out there.
Yeah, there's no reference points. We always talk about this when you get into a gap area, and this is the reason that the stocks move very quickly through there, is there's no previous reference points for technical traders to draw from because it did gap through that area, taking out all those traders. So that's the scary thought, is once you get back into the gap area, it can move through it with a little more relative ease. Do I think Priceline's going to lose $30 today? No. But it's over the course of a little while, you never know. There's just not much in there. We are in a broken market here. I mean, the S&P's down another $7 here again. So it's scary to own anything, and it's really scary to own stocks that are trading through gap areas. So if you're
Yeah,
picking
and
them,
referring to that too. Just look at pull up the Facebook chart. Remember, it had that huge rally on the
yes,
earnings, went up to 24 and a
fill
quarter.
the entire
And,
gap.
yep, and now it's coming back. Actually, it has 18 more cents to go, and it's gonna fill the gap. So yeah, those reference points. It may take a while, but if you do your homework and you follow these gap areas, they usually fill them.
Yeah, often they do. So it's just, we're always looking for edges, little edges, and that's when you got the trading in these gap areas. If you're looking at your dailies and there's not a heck of a lot in there, but an excellent swing trade for somebody. I remember the Facebook, I'm kind of kicking myself. I wanted to sell it there. It ticked up in the pre-market to $25, remember, after the earnings, which was
Yep.
absolutely ridiculous. And all of a sudden, slowly, a couple, 2, 3 days, it gives back half of it, and then over the course of the next week, it gives back the other half. So Facebook doesn't look good on the charts either, but it is filling that gap, so at least you're getting back into some reference points areas if you're trying to pick bottoms in Facebook. McDonald's had earnings there yesterday morning. Stock obviously took out the 86 support during the regular session. We had talked about that 86 level. Disappointing, it took it out. Now that chart looks broken as well.
Yeah, I mean, you'll use that 86 point now as resistance. It took it out. Looking at the activity in the pre-market, just spotty trades here around 84, 82. That's been the current low. You have to go out to the monthlies now, Dennis, to find support in this stock. And I mentioned this yesterday. Back in September 2011, it traded at 83.65. The following month, 83.74. We're still a buck away from there, but that's going to be your next major area of support in Mickey D's.
ExxonMobil and
Oh,
Chevron, both of these charts. What an awful 3 days for
oh,
ExxonMobil. Here it was, it bounced off the 90 with 4 or 5, 6 times it bounced off the 90. Had a good bounce when we had and those numbers there from the Friday. Got up, ticked up to 92 where there was an old high, and then boom, gave back a lot of those gains. The next day, boom, took out the 90 and lost $2. Follow through again, boom. So here's ExxonMobil basically in 3 trading sessions giving back its last 2 months of gains.
yep, 87.03 was the low, sold right off there. That coincides with our September 5th low of 87.06. So it's traded up a little bit. That's going to be support. You get some buyers to that area. You also have a low back on September 4th of 86.52. But it's just absolutely amazing that 2 months of drudging up to these stocks in 3 days, it's gone.
Up like an escalator, down like an elevator. Chevron, same
Oh,
story. Charts broken. We know how it had the whole island top basically up there from September. Came back down, got back up to 115, and since then just been the slow march of death here. 105.87 is where it's trading at, or where it closed at. No trades in the pre-market to report. I mean, I got to think this thing's going to test the 105 area, and especially that low that we had back in July of 105.28.
and for those of you that are short, that are, trying to look for a reference point as far as, instead of buying it, trying to pick the bottom, I will allow Dennis to draw a trend line off the 115.36 high coming down. It catches those other highs that you had around 111 and change. And now that's a pretty steep trend line coming down. You do have some support here, 104.61. That was a low on July 24th.
Looking at a few other ones I wanted to highlight. If you want to look at bottoms and try to pick bottoms, Coca-Cola has some institutional buying pressure at 36. Because I know a lot of you guys are licking your chops, looking. Very hard to pick bottoms. If it takes out 36, I'd get out. But if you're looking for a low risk play, get in the 36.05 area. I think you'll find some high frequency support for once, especially when we go back and look. There was a low there at 35.91 back in April.
You
So
actually had four lows there, Dennis.
oh, in the whole 30, yeah, because on the weeklies I don't see the days. I just see
Yep,
it's all
yep,
so
yep.
$36. Call that whole area major support. If Coke goes below there, I don't know where it's going, but it might get an initial bounce from there because we have moved down basically a dollar in the last or 60 cents yesterday and losing a little bit from the day before. So I think you might find some support in the Coke at 36. What else do you want to look at here, Joel? I know you want to look at a few of the Big Ten. Maybe we should look at like a General Electric because here's another chart that looks broken as well. It's a story of the day here. We were saying it yesterday. All the charts look broken. They're continued to be broken today. We're down another 6, obviously S&P, but GE taking out the 21 support, 2088 looks like it's sitting on a cliff, ready to go down to try the 2050 area.
Yep, double bottom from September 4th and 5th, 2048, 2051. That looks like the next stopping point. It looked like 21 was going to try and hold. He had a couple bombs in that area, couldn't hold. Now that 21, if you get any kind of furious rally back up to 21, use that as resistance. And once again, using double bottom at right around 2050 as support. But we could talk about the Big Ten, but you really have to look at this in relation, to the big index, Dennis. And what you're falling into here is, we had talked about the 1390 level. We took out that area of support. And when I'm looking at stocks and or charts for the market or the SPOOs, I look for like the next major low. And the next major low in the S&P 500 is the August 3rd low of 1353. I think that we may see that today over the next couple days. It's right around the 1350 number. I just don't see any tradable levels down to that level.
No, we're moving up. We're moving down through the area that we moved through very quickly on the way up. Because if you look even the day before that, on August the 2nd, we hit a low at 1343. We had a spike, a little pullback the next day, but then we continued to spike up. So in 2 trading sessions, we basically went from 1343 up to 1388, where we found all that support from before. So we say when they move up quickly, they move down quickly, and there's just not a heck of a lot in there until you, like you said, the first stopping point might be 1353. After that, I look at that 1343 number. So you're picking a bottom here, you're kind of in the middle of nowhere. So wait till it gets to an old support. It might be a better play for you. Obviously, sometimes things make new bottoms, but a lot of times they do coincide with old bottoms too. So from a technical perspective, it looks like you're early if you're picking the bottom here.
And yesterday, it's kind of a vague term, but you say rallies are meant to be sold, and there's always that sympathetic rally off the open. You had it yesterday. You got over the Globex high by a couple points. I just think traders should be aware, a couple levels on the upside if we do get a rally going. You have Thursday's low at 1372.50. That will be some minor resistance. And keep an eye on the close, 1375 and a quarter. That is going to be very good resistance today. And then also the overnight high of 1381.75. Well, I hope we didn't scare our listeners with too much doom and gloom today, Dennis.
Hopefully not, but they've got to be prepared for good markets and for bad markets, and just we're in this situation where the market isn't as pretty as it was a couple of months ago. So got to be always be able to trade it both ways. That's the key to being a trader, and try not to take too much of an opinion. Just let the numbers tell you what to do. That's our show for today, folks. Have a great trading day. We will be back with you guys on Monday.